You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. At Masters in Trading Live, we get on here every single day the market's open, 11 o'clock Eastern Time, to share our very best thoughts, and once in a while, we'll share some of our very best trades. I gotta manage expectations because yesterday we had our trade of the day, and yesterday I believe that trade's up 50 or 60%. So manage expectations. We're not always gonna get 50% return in one night. I'm gonna go over that trade because I wanna talk about trade management. In my opinion, it's not too hard to find a trade. I really don't believe it's too hard to find a trade. What's very difficult is managing a trade, keeping a balanced portfolio so you have longs and so you have shorts, so you have long volatility and short volatility. So it's more important, in my opinion, trade management rather than just that trade ideation. So today we're going to talk, we have 4 topics. The first topic is going to be patience. I talk about this all the time. When you're trading options, options have an expiration. That's the time that you're in the trade. Too many people are getting into trades that have 100 days till expiration. The market moves in 8 days and you're running for the hills. You have all that beautiful, lovely optionality that you're not using. So we're going to talk about patience. We're going to talk about having conviction for a trade. You have a trade, you have conviction, it's going against you. What do? When do you add? That brings us into our next topic. To fade or not to fade. Fading means when the market goes against you, you're adding to your position. That's all that means. So if you're fading the market, if you buy the stock at 10 and the next day it's offered at 9, you choose to buy it again, you just chose to fade the market. So we're going to talk about when should you be fading the market. And then finally, we have a big mover today. We got Fed Day. A bunch of cool topics. Excited to get into this one. Let's go over to the screen. Okay, I'm going to start you right here. Hopefully you can see this. Every single day, Masters in Trading Live, we present, and underneath Masters in Trading Live, you'll see our full portfolio. Okay, our full portfolio going back to when we started in February. mastersintrading.com/live. So yesterday, we shared a trade in PAS, okay? Yesterday, we were looking to get in for $1.05. Let me pull up PAS. Let's try to do it like this. So PAS, we are getting into September 23 calls, getting in for $1.05. That's $105 of risk. Now, if you did a 10 lot, that's $1,050 of risk. Right now, the 23 calls are trading $1.60 mid-market. They traded up to $1.80, giving you a 70% return in one night if you wanted to do that. But for those in PAS, you have 51 days. Let this sucker work. Be patient. We shared yesterday how inexpensive silver is relative to gold. PAS is a silver company very correlated to gold, so we made a choice to invest for 50 days or 52 days in PAS. Yeah, we're up a whole bunch of money, but we don't want to just get out of the trade. Rather than that, what we're going to be discussing in our Discord community is when these upside calls go bid. That's what we want to sell because we want to work ourselves into a vertical spread where we're long from 23 and maybe we sell the 27s or 28s for $1. That's the trade that we want. We want to take off that risk while still keeping ourselves in position to make a whole bunch of money when it really follows through. PAS. Here's another trade, AMN. And AMN is a beautiful, beautiful example of patience. Patience, patience, patience. 321, March 21st, we buy stock in AMN, 63.23. At the same time, so we're buying stock at 66.23. We're also we're selling calls at the 80 strike. So that looks like I'm selling stock at 82.27. Because it's 227 is the credit that we're going to keep as long as AMN stays under 80. Even if it flies through there, we're still going to be able to keep that 227. We're just going to take away some of our upside if the stock gets above 80. Well, patience, May 17th, we sold these for 227. We already bought them back for 30 cents. Why did I buy them back? Because we're able to lock in $2. So that $2 takes this down to 64.23. Now, when we got into the trade, which was right about here, it didn't work right away. It went against us. Fuck, it went against us. Wah! But that's okay because we had a plan. We had a reason for being in the trade. We know how much time we have, and we have patience on our side. Patience, confidence, belief. Okay? You get into the trade, you make the determination on how long you're willing to stay in that trade before you risk any money, and then you hold on. Right now, AMN is at 67. We want to cover this trade in the free portfolio. Patience, great job. This turned a trade that wasn't really a winner for a while into a really nice trade with a really smart return. So congrats to all our AMN traders. Caesar is another one. Caesar is on the move. March 26th, same kind of trade, right? Covered call. Covered call, we're buying at 43.61, and then we're also selling at 60. A whole bunch of premium to sell at 60. Caesar, let me just pull up an option chain for you. Caesar today is up 10. But we're still down money on our original cost, right? That's okay. Going out to January, lots and lots of time. Now, the whole idea about this trade is we're going to get in. We are long-term investors in CZR. So right now, we're chilling. We're just holding this position. We are in good shape. We are a long-term holder in CZR, up a nice 10%, 11% today. So just relax, be patient. This is working exactly how we expect it to work. Great question from Deb B. Thank you for sharing this question, Deb. Question: if after getting into an option trade and having it go against you, okay, right away, you get into an option trade and it goes against you, immediately what I'm thinking is, awesome, excellent. If I loved it at $1, well, darn right, I love it at 80 cents. If we get into a trade, we have strong conviction, always. You don't get into a trade without strong conviction. If you're considering 10 different trades and you have one trade that you love, the third trade's okay, the seventh trade is meh, trade less. Any trade that you don't have strong conviction on, don't you dare risk all that money that you work so hard to obtain. We only want to be in trades that we have strong conviction. Is it better to keep tranching, spelling error, -1 point? Just kidding, Debbie, just playing around. Tranching, which is just if the market goes against you, tranching is adding different levels. We tranche in because we have a fixed amount of time. So is it better to keep tranching into the same option, or would it be better to open a new option with a different expiration date? I want to stay in the same expiration date because your original trade considered that expiration date. As far as a specific level to trade, what I would do is look to delta. So whenever you're looking to add something, delta is going to make sure that you have some intrinsic value. 0.36, 0.31, you want to make sure that you got some stock in there. So 0.31, look at this as like 1/3 stock and 2/3 fluff, 2/3 premium. So whenever you're adding, make sure that you're adding a delta 0.3, 0.35. You don't want to add if a delta is 0.86 or 0.91, it's already stock. Deb, hopefully that answers your question. If it doesn't, please just follow up in Discord. Oh, JR, thank you for sharing Reddit. I didn't realize that I put this. Reddit. Reddit's a great example of a trade that we love, right? Why? It's a lockup. IPO lockups. IPO lockups, they might give like 10 million shares to trade, but they really have 100 million shares to trade and 90 million are locked up. So for any lockup, in the first 6 months, we are selling rallies. If you get a chance, you go back and look at Google IPO, Apple IPO, Meta IPO. They all have a lockup. They all failed during their lockup. So a trade like Reddit, these we get confidence. So if you sold here and you didn't get out here, but it got back up here, you got to sell. You have to. It's just a money management trade. And then when it comes off, this is the first one that you're taking off. So you're taking off one, then you're taking off two as it comes off, and then you're taking off three. So right away, if a trade goes against you, we want to think about P&L management, position management. We're going to make money when we're right. When we're wrong, we want to play defense and try to break even as best that we can. Caesar, back again. I guess I'm going the wrong way. Katos, another good example. Katos, I have so many videos about getting long attack drones. So for those who have been watching, Katos is a name that we're buying on every dip. Okay? And then what you'll notice is we trade it. We'll trade some, buy some, sell some. This one too, we made a little bit here. And Katos, we're still long at 17.28. Katos last trade, I don't know, 22.23. If Katos trades under 20 after earnings, we are buyers. We want to be long attack drones. Okay, it has earnings. If it trades under 20, we'll get back in. We are still long stock in Katos. Fed day. Big day today, right? Big day. Today is Fed day. Woo! That's exciting. What I want to share for Fed day, here's your big number to watch. We shared this 2 weeks ago, maybe. We shared it the first time that the NASDAQ traded down here. This is the 100 period moving average. Stocks don't like to stay around big numbers. Your line in the sand today is going to be that 455. Right now we're trading 470. I would bet that we trade lower going into Fed, and then this is going to be the key level. 455 on the QQQ, that's what I want you to watch. If we do go through there, we will go down and attack that 428 number, especially on the backbone of Fed. If we get under 455, look at that as big time resistance. I like these days because Fed, we know there's going to be movement. So we will get nice and slow going into that Fed day, but then patience, wait, manage your positions. Know beforehand what names If they go against you, you're willing to add on. Know beforehand what names that you're long, if it goes your way, that you want to take off. A really good thing to do is have limit orders in the market. You can work resting orders in the market if it's too fast after Fed, and that way you have the potential to get filled. On the all access portion of this video, we're going to go over some more Fed day and go over some of our earnings positions.